Hi everyone, thank you for joining on a historic week. The week started with President Trump's inauguration, and his footprint has been felt across financial markets since then. The new president said that he would get to work straight away, and he's certainly done that. His first executive orders as president have been mostly focused on domestic issues, such as immigration, while foreign trade and tariffs did not take centre stage. Now, this is positive for risk sentiment. Stock indices in Europe are higher, bond yields are lower across the board, and US stocks are also expected to benefit. Since Trump's election win, his policy stance on tariffs to dissuade US companies from relocating abroad, his stance on China and his plans to label China a currency manipulator have been most important for financial markets. But early on Monday, a report surfaced that said Trump would not implement tariffs straight away, and instead, he'd instruct federal departments to conduct studies on these issues before he'd implement his tariffs. Now, this is undoubtedly risk positive. However, financial markets may not want to get too complacent. Trump didn't label China a currency manipulator until 2019 in his last presidency, and tariffs didn't come into play until well into his first year. However, Trump 2.0 has a slightly different flavour to it. Not only did he win a strong majority this time round, but he also has a more professional staff. This could be why Trump has put tariffs on the back burner. However, there's a dichotomy developing in regard to Trump's tariff threats. While China's on the back burner for now, the focus has switched to Canada and Mexico. Trump said that he could slap tariffs on their imports to the tune of 25% due to the wave of immigration and drugs crossing the US border from Mexico and Canada. So although he's still threatening chunky tariffs on foreign imports, they're linked to US social issues, which is more benign for financial markets, and we've seen stock markets rally into Trump's inauguration. Since then, stocks have mostly been positive, although we might not see the same level of returns that we saw last week for global stock markets. The FX market is experiencing a more risk-off tone, with big losses for the Mexican peso and the Canadian dollar, which is to be expected, as these countries still face the threat of Trump tariffs. The dollar's also stronger across the board this week, in a sign that Trump's America First policy could see a strong dollar continue. Even so, we expect some stabilisation in the pound and the euro in the short term, especially since Trump has so far avoided any mention of tariffs against European goods. And finally, energy. Energy prices have declined across the board. The price of Brent crude oil is below $80 per barrel after Trump signed an emergency order that will allow more exports of US energy around the world. This could keep a lid on energy prices for some time, and $80 per barrel looks like a medium-term cap on Brent crude prices. The positive tone to risk, the stabilisation in bond markets, and the reduced inflation concerns due to the delay of Trump's tariff program may also limit the gold price, and gold could find it hard to rally from here. That's all for now. Thank you for joining.